All right, so today we're going to talk on business entities, how to start them, what they are. We'll get more into that as we flow along. So, which is actually great that you're here today, Richard. You know, perfect timing. So, who we are. So this started as a workshop a little over 2.5 years ago in the summer of 2015. At the time, another gentleman that Gino Aragon. He and we met at Traction RIA, friend of a friend. He's a veteran as well, obviously. We kept talking that we'd always see the same people at these RIAs, always be the same ones saying that they've gotten deals, you know? So out of every 100 people, there's probably 5. So it was like always the 5%ers that were always getting deals. So we were like, what if we can get those people in a room and just be us? Fast forward a couple of months, my now wife, you know, then girlfriend, told me, you know, she's found the Betty on Grand Canyon that how I can just chat, well, it's just me, but how we can all just chat each other up real easy when we just meet. You know, it's like, and I'm like, no, we're just veterans. You know, it's just a natural thing. You know, we just connect. So between all those things being put together, she kind of said, hey, why don't you start a veterans group? And I thought that was a great idea because we all tend to have a bias for action. Moved forward with that, created that workshop in summer of 2015. That evolved into what this is today in October of 2015, which is a mastermind, meaning that we lie at a point beyond fear, meaning we lie at a point where we are actually taking action, we're actually making offers, we're prospecting or have an interest to do so, you know, like a strong interest, not like a, you know, I have an inclination to do so. But you actually want to take action, you don't know what to do, or you are already taking action. Those are really like who this group is more catered to. Everybody's welcome if they're a vet, you know, or they're invited. But my intent is intentionally to make it uncomfortable for you if you're not doing anything, you know, because you'll hear, as you saw when we were doing the introductions, there were people saying, hey, I'm doing this, I'm getting deals, I've put offers in. You know, you're gonna be that guy just sitting going, well, I haven't done anything, right? And that's cool, you know, as long as you wanna do something. Even if you're not doing anything, you're still always invited. But the focus is to also kind of motivate you and bring you off the fence and get you to do stuff. Because as a mastermind, what we are is, as each one of us goes and does all these transactions, we learn from one another. You know, it becomes more of a case study, more of a learning from one another. And you'll see, like, this is a presentation, and I found that this format works best because it gives a theme and kind of scope to the meeting, but it's more a conversation. You know, it's just a means for conversation. So I will just as easily break from the presentation and go straight to, you know, what is happening with everyone here. You know, how can we help you? At the end of this night, you know, what you should walk away with is, you know, points from us is what your next step should be. You know, you tell us what your challenges are, what should you do. It doesn't have anything to do with it tonight, just what are your challenges, and that's what we're here for. You know, so I'm trying to maintain that same brotherhood that we've had as veterans in here. Okay. So BZ's, Gino's not with us tonight, has a property that he's rehabbing right now. Should be coming on the market fairly soon. So BZ to him. Josh, we already said, this is your second deal in 4 months, or in a 4-month span, so. Yeah. 3 months, 3 months, yes. Careful. I'll just sit down. But cool, but Josh actually had, you know, had a length conversation. If you want to have the floor here.
Yeah, if you don't mind if I just
No, man, no.
So I'm about to quit full-time job and start doing wholesaling, but I'm also hiring because it's really a numbers game in sales. It's going to be a 1099 contractor, heavily commission-based, but we'll still pay you hourly. If you know of anybody or anybody interested, or you know, maybe can't or doesn't want to start their own business and start investing, but they're interested and they're sales-driven, please, you know, reach out to Lewis, and Lewis will tell me. I'd love to at least have a conversation with them and see what happens. It never hurts.
Yeah, awesome. All right. And Josh, I mean, you got your feet wet with that first deal, and,
Oh, yeah.
and you know, it was 3 months ago. And but he showed up here in summer of last year. That's when we first met, when we were at our last location. And you know, made an impression on me from the first time I met you. You told me you were gonna go door knocking. I was like, all right, dude, you know, have at it. I know many an agent that, you know, gets a yellow streak down their back when they mention that. But as you know, as the months went on, I kind of knew, you know, you were the real deal. And then out of the blue, like already had property under contract. So, you know, good having you on board, man.
Thank you.
And we'll circle back and break real fast. And Tyron, quick intro, or do you want to just?
Oh, intro now?
Yeah, well, if you want, we could keep going. But
I'm Tyron. One of the plant members. Just been here for a long time. Sorry I'm late, but coming from another event.
you notice we got back with us,
Huh?
Richard. Yeah.
Oh yeah, you did the guy from Baltimore, right? You did some project.
Yeah.
Okay.
Yep. Nope. So for the Army brethren who we keep saying this thing, plank owners. Plank owner in the Navy is the initial crew on a ship. So the first to be assigned to a ship. So no crew had ever been on there before. It goes from back to the days of wooden ships. It's those people were called plank owners, or those sailors were called plank owners. And we continue this. Yeah. That tradition continues on to today. So, you know, the first when Second Force became MARSOC, those Marines were plank owners at MARSOC. You know, so all right. Leon Pham, who's not with us tonight, in cahoots with Keon. Oh man, that's actually a tongue tie right there, Leon and Keon. But they got a property under contract last month, well, no, it wasn't under contract. You bought it. Well, you financed it.
I financed it.
Yeah, you financed it. And it's undergoing rehab now. And when I spoke with him last week, he said it should be going on the market next month. I mean, February. So 60-day turnaround.
Yeah,
So-
he done his homework when he came to the group and said he was looking for help with financing.
Yeah.
And talked with one of my partners, got him all set. He's got an interesting story he'll tell you about the tenant, getting the tenant out. But everything went well.
Okay, awesome. Yeah, well, thanks for that, man. All right, and so tonight we're also going to talk about Operation Enduring Resolve, the War Room, and finally get to our presentation discussion. So OER, right? Stealing it from the military. There isn't one, which is why I was able to get away with it. So that officially launched in December 11th of last month. Operation Enduring Resolve is you all get to follow me along as I build the real estate business. So as with Josh accomplishing what he had and a couple other people in here getting deals, everybody gets to see and talk to me by virtue of me just being the dude in the front of the room. So I took it upon myself to say, okay, well, what if I create something where you can see me putting together all this stuff, right? So that's what Operation Enduring Resolve is. The infrastructure is created, there is a live site, and you can go on there now. It's not gonna look all that great because I'm editing live because I don't know how else to not edit live. But by Monday, this will all have videos up there. It'll have some articles that I've written, and this weekend I've got some videos sketched out that I'm gonna get in front of the camera, shoot, and start uploading. Upload plan's gonna be my goal right now is 2 per week, either 2 articles or 2 videos. Not much editing, Richard. I know. It's aggressive. Yeah, it's aggressive. Yeah, it's aggressive. But it's the only way. I was like, well, I can do 1 a week. But then it's so many questions I get, and you'll see like everything that's kind of going into it. I was like, well, I'll go at 2 a week. If I fall short, then I'll still be at 1 a week. But it'll be bad if I go 1 a week and I do 1 every 2 weeks. That'd be horrible. But everything for that is going to be shared on our Facebook Mastermind group. And also on a YouTube channel that I created called Enduring Resolve. And when I email this presentation out to y'all, those will be actual links. So you'll be able to click on there and go to the respective site, right? So some challenges I've faced thus far is that this is gonna have to be an extension of what I'm already doing. So when I took this on and I kind of got motivated, I jumped on this, I was like, yeah, this is gonna be awesome, I'm gonna do this, and you're all gonna see me, and some of you all got just as excited. it can't be this other thing is what I'm learning, is because it just by virtue of my license, there's like a continuation to all this, you know. So the whole thing is I'm going to go pursue self-storage facilities. I currently have leasing clients, so I can't completely abandon the leasing side of the business to go do this and, you know, not have it affect me financially. So this will be a learning experience as well for me. I've never done anything like this before, but we'll see more than what we've been talking about in the last 2 months. And a lot of this it's supposed to be collaborative, right? So y'all tell me, yeah, we want to see more of this. We don't want to see more of that. That was stupid. Don't do that again, you know. And we'll keep adjusting fires from there, because at the end of the day, you'll see someone build a business, right? That's really where we'll go with it, because building just an exclusively investment business, just from where I am right now, is not practical. I would have to abandon a lot of what I've already done a lot of work building, and kind of jeopardize it, if you know what I mean. Because I would have to stop prospecting for things that are already in my pipeline to go prospect for something completely different, when I can just prospect for both, you know, and not derail the train. Okay? Competing family financial goals for investing funds. So what that means is there's cash strategies and cash flow strategies, right? What I'm talking with my wife, I too am expecting a child in January, my first, and June, my first. So thank you. But it's as we're talking about everything, I got married last summer. So with all the expenses we've had, and just a lot of the life changes that we've had, and some goals that we've had aside from OER, also in procuring a small multifamily, I am going to go down the right of more of a cash strategy right now than a cash flow strategy. When I first pitched OER, it was going to be a cash flow strategy. Does that, if I'm saying stuff that,
No, it's-
okay.
If you're asking me, yes,
Yeah,
that makes sense.
okay. Yeah, so I'm going to go down more the cash strategy side, which is also going to include me brokering things. But at least I'll spin it in a way so that it's valuable to an investor. You know, so it's not like I'm talking to I'm a salesman. I know not everybody in the room is a salesman, but I'll spin it so that, why is this valuable to you? You know, so because as a commercial broker, like, everything I do are investments, right? So I'll give you that kind of spin on it. What went on to get to that point? Okay, so but like I said, it's going to be a learning process. This is what I've actually accomplished. All of this, it just hasn't made it onto that website, which was, you know, these were the first 3 weeks of the operation. It's a 16-week operation. I usually do 12-week operations, but I've got orders coming up, so that I kind of extended them because of that. So this is when I was doing all the website stuff. I already established funding model. That was not difficult because I do that continuously. Our official book for the class, or for the mastermind, is the good old Millionaire Real Estate Investor. It's got 4 models in here. You've got the net worth model, financial model, network model, lead generation model. So this right here is the net worth model that I was working, but I always do budgets monthly and I work them weekly. So what I'm doing here, what I did here was, how do I communicate that with you all? So, and I wrote a couple articles on how I budget and how I kind of track my funds. And then I'm working on some points on how to develop goals, right? Establishing criteria acquisition model. That one's a little bit fudgier now. Just, I mean, I did that. The criteria that I came up with had to be a self-storage facility that had no employees. Just because I prefer to own those first. I'd rather not have to deal with W-2s. But that, with everything I just said about the challenges I faced, this will be part of that learning process, right? Next, I built lists, designed mailings, and designed systems. So I have done that thus far. I've got 7,900 and change records of self-storage facilities. Those include facilities in Pennsylvania, Virginia, DC, Maryland, West Virginia, North Carolina, Delaware, and Cook County, which is the county that Chicago's in. That's where my wife's from. So I arrived at that number because I was aiming for 4,000. because Cook County alone has 1,200 records. The state of Virginia has 300. So that's why the geographic area grew so much. Was, I was like, okay, I'd add one more and it'd explode, and I add another, and I only get like a trickle. So, but I'll get into why my list got that big. I added Cook County because my wife's from there. We have reasons to go there. So I was like, and it's a good a city as any. So, but I'll get into how I built lists, but I've done this already. And this is this month. The mailing, which were supposed to happen this week, I'm pushing until next week until I kind of have a discussion with my family as to what we're going to pursue, if it's going to be the self-storage or if it's going to be a multifamily. So I'll keep you posted on that. In any case, there's still value added for you all because it is, it is going to be an investment property at some point. So the focus was self-storage, but if I still show the processes I'm going through with managing those 4 models I mentioned, I think that's going to be the value add. And this is just the first iteration. When we do this again, then it'll be that much more cleaned up. So, and then from there, we're going to see, I'm aiming to do 1,000 attempts for business each week. Be that cold call, be that mailings, looking at a website and perusing through all the properties. It's just 1,000 attempts, just eyeballs on 1,000 properties of some kind. Evaluate results, I'll be doing that this week already. It feels like it just came real fast. I mean, mine's just 2 weeks away, but still, it coincides with my drill, and then more prospecting. So that's how this month is shaping out to be, right? The war room, all right? So that I am going to do every 2 weeks. So the war room is taking our active investors and placing them all in a Hangouts phone call. I don't know if it's a phone call, but it's a Hangouts thing, right? And
Skype.
No, it's a Hangouts. You can't meet for the 4 months.
Well,
but
it's
it gets
the
you for
same
Hangouts.
thing. It's the same thing.
Yeah, but it's so I'll for this it's you guys have been asking me for this is okay, we want to do more case studies, do what it is that people are doing. So in order to gain access to the war room, it's going to be no more than 15 members by invitation only. Some of you already that I've talked to have gotten that invitation. Must have attended at least 6 masterminds, waiverable down to 3. Must have completed a deal within the last rolling 12 months. And I know it's not unwaiverable, but out of spite to Tom and calling me out, I've left unwaiverable on there. But that is so that, it's not like, oh, I got a deal once like 2 years ago. It's like, no, it's like you've got to still be active, right? Because the goal is, learn from one another. And you must still be actively pursuing deals. Again, the way that's going to go is we're going to go through the group. Everybody's going to talk about our tasks, how you've done, how you performed. Then we're going to go down this priority list, and depending on where your deal is in all of this, we'll single out someone and go, okay, what are your challenges? Tell us what's going on. Give them about 15 minutes. And that's our way to kind of say, okay, this is what you're facing, this is what your challenges are, and we kind of help them or her through it. And then we'll end the call by establishing tasks for the next call, right? So all of that is to happen in 30 minutes. I was telling Josh, I used to do this before. I wasn't the leader of the group at that time. It started this way and it just evolved, we were all friends, so it would turn just into just us catching up. So, but the intent of this is to keep it focused, keep it at 30 minutes. If you have ever read the 12-week year, that's what I'm focused on. That's where the structure comes from. In the 12-week year, they ask for you to do a weekly check-in call with a couple other people that should take no more than 10 minutes. It's purely an accountability thing. So there you go. All right, so business entities. That was all one way. From here on out, it should be more involved, right? So why can I talk about this stuff, right? I do have a Master of Science degree in accounting with a specialization in taxation. I've started managing a couple of LLCs, and I started doing business as a DBA in 2005. I do qualify to sit for the CPA exam. I have absolutely, positively no interest whatsoever in doing that. Not even a viable career choice. I thought about it for like an instant, just for like street cred, but it's street cred I don't even care to have, because people asking more questions that I really don't want to keep track of being able to answer, you know. But right, so we always have a disclaimer, right, for this type of talk. So everything here, the goal is just so y'all understand all the different entities that are out there for you to choose from. You'll just know enough to be able to go actually have a conversation with someone like Richard. No, I know Richard. I know you don't touch this stuff, but you know, meaning someone with a license, right? Be that a CPA license, a law license. The big thing is really, and we'll get into this as we go along, is all this stuff is very unique, right, to each individual. So what makes sense to me is not going to make sense to Josh, it's not going to make sense to Sierra, because we could be in completely different. Our tax situation is different, you know. A single 23, 24, 23-year-old to a married expecting 39-year-old is different tax situation, right? So that's why you need to sit down with somebody.
There was a good book I just bought. Of course, I forget the name right when I was about to say. But it's very quick, and it's meant for somebody that has no idea what taxes are. It's all for 2018, based on the new laws. It literally just came out.
Okay.
Read the first couple pages, and it's really good.
What's up, John?
Hey. It's been really good so far. I don't think, or I don't want to be an accountant, so I try to stay as far away as possible, but it's English, at least. So it's really good. But when it comes to my head, I'll let you guys know.
Did I let you get settled? You want to do a quick intro?
Well, we're all friends. No introduction.
Well, we got some new people in the group, brother.
Right. Well, my name is John Reed. U.S. Army, 10 years, veteran. I like to invest in commercial real estate. So, working on maybe 2 deals right now in talks with the seller, and we'll see how it goes. I'll keep everybody posted.
Nice. There's been so much activity, Richard. You came back at the right time, brother. All right, so there'll be some figures on this presentation. Where I could, I try to update for the new tax bill, but more take away the concepts and the actual information, you know, because I didn't update the whole thing. I don't know all the changes that came out in the new tax law. So the big thing is just the takeaways, right? So this is what I'm going to talk about. Just a brief overview of taxation and why to create an entity, the different types of entities that there are, S-Corp, C-Corp, DBA, partnerships, LLCs, and we're not going to touch trust because that is way over my head. Taxation. So the big question is, do we have a progressive tax system?
Yes.
Yes? Yes? In my opinion, we do not, right? In my opinion. And that is, you're not taxed on how much money you get. You're taxed on where your money's coming from, okay? So more on that. So categorization of income, right? So yeah, ordinary income, which is one we all kind of know. It's that W-2 paycheck. That gets taxed. That's the one that everybody talks about, right? That's the, are you in the 38% tax bracket, or what now is the 35% tax bracket, the 26, whatever the heck it is. That's the one that we always kind of know, right? That's the easy one from sake of just conversation. It's by far the most complicated one by sake of like actually filing anything, but it's also the highest taxes, okay? And that's really the only progressive element of our system. So the more you earn, the more you pay, you know, as far as, you know, because you hit the new tax bracket, you get taxed on a new tax rate, or the difference of what you earned there to what the last gate was, that amount gets taxed at the new tax rate. That's really the only progressive part of our tax system. So you pay social or entitlement taxes. So that's Social Security, that's
FICA and Medicare.
FICA and Medicare. Yeah, so that's what you're paying on that guy. So now portfolio income, dividend income, that's stuff coming from stocks, bonds, paper assets. You do not pay social or entitlement taxes on those, right? So that's already an immediate reduction, right? Then you have passive income, for example, like real estate, which we pay our taxable income is determined after our expenses, in contrast to this guy, which, you know, the government takes its cut before you ever see it, and so it's taking the money, you know, as you're getting paid, and then with that you go spend, you know, then you go incur expenses. Over here, which, and that's really for businesses as well, right? You're incurring expenses and you're getting income, but what your taxable income is at the end is what was after you remove the expenses from that income. It's the opposite of the former. Does that make sense? All right, sweet. All right. So how to get an entity, right? So you can go, for corporations and LLCs, you can go to the state, or you can go to the federal government. You got to go to both. In Virginia, is the SEC, the State Corporation something or other?
Commission?
Commission.
State
Boom.
Corporation.
Yeah. All right. Yeah. SEC.
I got a question.
Yeah. Fine.
So you don't have to go to the federal government to get an entity. You get an entity from the state, but you have to get an IRS number from the federal government.
Correct. Yeah.
Okay.
Yep. Yep. You got it. Yep. That's it.
And Maryland is SDAT.
It's S.
SDAT. State, Maryland, it's, when you go, it's like SDAT. It's Maryland State Department of Taxation. They just call it SDAT.
Oh. Okay. I'll pay that. Cool.
I got one other question.
Yeah.
If you don't have an if you go ahead and incorporate and get an LLC through your state, and you don't get a EIN number,
Uh-huh.
what happens? Does that make it invalid, or is there any reason you would do that?
I think it reverts to your social. Well, an LLC maybe. No.
Yeah, an LLC, you have to. It's
Yeah.
a separate business entity.
Okay.
It's a separate legal entity.
So you have to get an EIN. Yeah, so as the DBA would be, you'd be okay with your social.
Yeah,
Okay.
But as an LLC,
Yeah.
Okay.
Really with any of these right here.
you can go on the IRS website and apply for it.
Yeah. With,
Yeah.
with,
They'll actually give you the number right on the website, and then they send you a letter.
Okay.
yeah. So all that stuff, yeah, you do need an EIN, just like everybody's telling you, except for this guy. With the DBAs, and we'll get into that, there's no difference between it because they're doing business as, that's your social. And I always throw this one up there just because, you know, I've had to get business licenses, you know, like for a couple of ventures I had one where I was doing an online, like a drop shipping thing. And in Arlington, I had to get a license to do that. Even though I wasn't keeping any inventory in my house, it was going from some warehouse that I never saw. I still had to get a business license from the county. For real estate investing, not so much, but if you're doing other stuff, it's always good to check. You don't want surprises with the government. Okay, so C-Corps, you know, this is what we usually think of when we think of a corporation, you know, like a business. You know, it awards shares, it's got, you know, it doesn't have to be publicly traded, but usually those are, you know, what you see when you go on NASDAQ and you go on NYSE, CBOT, that's what this is. You can actually be incorporated as a small business. Nothing stops you, you know. Government will gladly take your money, right? It's a fully incorporated entity. It issues stocks. Now, for accounting purposes, so for us as small businesses, like I use the cash method of accounting, which is I make money and I spend money, and whenever I make money or spend money, it happens right there. So I recognize expenses and cash instantaneously. In the accrual method of accounting, corporations are obliged to use the accrual method of accounting. There are exceptions. We're not going to get into those here. You probably would qualify for one of them, but again, sit down with somebody. This is the ass pain we know about debits and credits and general ledgers. When you have a sale, even though you haven't made money yet or received money, you still have to recognize that transaction as accounts receivable, you take a loan or whatever, it's an accounts payable, and you have to track it under those general ledger accounts. That makes sense. Well, I don't know. I mean, everybody's different. I got a degree in accounting not because I liked accounting. I just didn't want to get an MBA. I didn't want to be another MBA. And again, no interest whatsoever in touching any of this crap. But it can get phenomenally intensive. So usually you either have to get a lot more education because you really don't want to goon this up. This is taxes, right? And this entity files its own tax return, right? So good and the bad. Okay, so it's completely separate from you. Like it's like it is its own thing. And I know that all we're talking here is making an entity. So you're making it something that's apart from you. But with these guys, it's definitely like completely separate from you. Has anybody in here ever started a corporation? I should have started there. Cool. All right. Yeah. I'm gonna power through this because I think most of us are gonna be in the LLCs. So usually this guy I hear is good for if you're bringing people in and people don't know the shareholders or the owners have a loose relationship or they're strangers. This is usually what I've heard is like the recommended method because the structure of it all. This got updated to 21%. We were at 35, but President Trump dropped us down to 21% for this. And like I said, here, any business expenses do not get deducted from your income. That's because the business gets its own tax return. All right? S-Corp, simpler than a C-Corp. Again, this is better now for us. This will kind of keep it in the back of your head because an LLC can be recognized as a S-Corp by your own choosing. Okay? This has pass-through taxation, meaning that everything that's happening at the business level comes right through. It's not its own tax return. It can have its own schedule, but you'll recognize it on your tax return.
Just that's for federal. Just to
Yeah.
make that clear. That's a federal thing, and when you say it's recognized as a S corp, it's only as far as taxation.
Yes.
It doesn't. And for anything else, it doesn't work out.
Oh, okay.
And the reason I make that important is because as far as the legal requirements in the law for each state, you still got to comply with all those reporting requirements and how it's supposed to be thing, and that's separate from the whole tax thing. So
Okay. Thanks. Tyrone.
All right, so I'm wondering, with the LLC piece, you're saying that we have to file those taxes with our taxes. Is that what am I?
Yes, we'll get to that one. I'll touch a little bit more on it, but yes, the easy answer is yes. It gets its own schedule for an LLC. And the reason I said an S-Corp is you can, when you go get that EIN, and I should have started there. So I have created my own LLCs, gone through and done everything. You can do it all in a day. Like you can do it all in an hour. Go to the SEC website, register an LLC. You do the business search name, make sure nobody else has got it. Pay it's $200 in the state of Virginia to get an LLC. Then it's like $50 each year to maintain. No,
It's $100.
$100. Okay,
$100.
$100.
And then $50 each year to renew.
There you go. So I have done that. I have gone to the federal site and done the EIN thing, and it asks you, do you want to be an S-Corp or do you want to be a partnership or an individual, a sole proprietorship? For this, I'm getting a little ahead of myself with the LLC, so I'm anticipating myself here. But since we're talking about S-Corps and it's one of the things that an LLC can do, all that to tell you, I had absolutely no business doing any of that stuff because at that time I had no clue what any of that meant, So it was, and I am glad that nothing ever went awry, because lo and behold, with an S-Corp, or anytime something is a corporation, and I may misspeak here, but you have to pay yourself a salary. You have to pay yourself a salary. So I never paid myself a salary.
But you can change, you can switch.
Yes.
So you could have started as an S-Corp and switched to just a standard single member or multi-member LLC or vice versa. Where the IRS gets squirrely is if you try to swap back and forth. So if you started as an S-Corp and say, whoa, hold on a second, this wasn't the right way to go, and you switched over, the IRS isn't gonna really worry about it, or vice versa. But you only can do that once, because as soon as you try to go back the other way, then they're gonna wanna come in and start checking your books out, and, you know, give you all kinds of extra attention, so.
You never want to file it as a sole proprietor, or what happens if you?
Well, so I'm a single member LLC, and it just passes through, and we'll talk about that, but only because I don't want to pay almost the same 18% self-employment tax.
Mhm.
So I just, you know, it's just me, so I don't pay myself a salary, I just take my profits and.
But do you have it set up where it's recognized as a sole proprietor or S-Corp?
Well, okay, the S-Corp is a taxation for the IRS, so it is a sole proprietorship for the test, because it's a single member LLC.
Okay.
So in the eyes of the IRS, I am the same thing as a sole proprietorship.
They recognize the
Even though-
LLC as a
Even
single-
though I have a single member LLC, or an LLC, so I have that corporate veil, but from the IRS's perspective, I'm a sole proprietorship because I'm a single member.
So, and,
Okay?
You are, or your LLC?
My LLC is a single member.
Yeah.
Now, I have a couple of them, so I can actually, if I really wanted to, sit there and do the whole kabuki dance of each one owns a portion of the other, just to get away from it. But, you know, at the end of the day, I'm still the guy standing behind the table, so I'm getting shot either way, so I'll have to just do it easy on myself.
now, are you, just to make sure, you know, before we move on, are you getting that there are S-Corps and there are LLCs, and then there are LLCs that you tell the federal government, I want to be taxed like an S-Corp.
Yeah.
So you didn't convert it over to an S-Corp, it's still an LLC, but.
Yeah, it's an LLC that's being,
Taxed as an S-Corp.
Yeah, okay, cool, right. Yep. This one, I kept it nice and easy, just because the C-Corp in my mind is pretty straightforward, it's confusing. The S-Corp is like one of those, like after I studied this and did all this, it's like, why would you ever choose that? You need like a lawyer or a CPA to tell you.
Well, there are some benefits, all right? So in my case, just to use my example, an S-Corp makes sense if I am grossing over $250,000 a year on either, you know, on profits, whether it be wholesale or rehab or whatever. Once I cross that 250 threshold, then it makes sense to do an S-Corp election and stay as an S-Corp, because now I can create that employee pension plan and dump the money into a 401k or a SEP or something like that. Because at that point, based on my income, that's the threshold, working with my accountant, that where it becomes profitable for me to be an S-Corp. Until that point, it's.
Let's hold on.
One second.
So.
You're saying you're still an LLC, but you're being taxed as an S-Corp.
Right.
You're not an S-Corp. So I think you're confusing the things here.
Okay.
When you say, if you can be a S-Corp and have Inc. after your name, that is a separate entity. And what you just said earlier is you can be an LLC and ask to be taxed as an S-Corp, which is what you're doing. So let's be very clear about the differences here. You know, a S-Corp is an Inc. You put Inc. after your name. LLC is an LLC, it can be taxed as some different entities, but it's an LLC and it has LLC after your name. So I don't want to confuse the guy back there. It's just be very clear about that.
It's always cool to have you. There was another class that I would have wished to have you here, Richard. This was it.
And he keeps saying that until I'm a lawyer. And I've done these things.
All right, cool. Yeah, but that's why I say that S-Corp, it's, I'm leaving the LLCs for last. That S-Corp, like an S-Corp, full-on S-Corp, is kind of like what Richard said. It's one of those, when I studied all of this stuff, it was like, it's very confusing to me as a non-professional CPA lawyer to go, this makes perfect sense in these situations. Like the other ones made more sense to me as far as when they would fit, but the S-Corp, I saw examples of it was like if it was a small family business, that's what the way used as for the S-Corps. But as far as like a type of business or anything like that. Nothing jumped out at me as to like, oh, that's why you go create an S-Corp, you know? So that's why I put as a con, another one may be better. I could be wrong, you know, there might be more times when the S-Corp is the right decision, but that's where you want to sit down with somebody. But it seems like it covers this nebulous middle ground for no apparent reason to me. Okay, so DBA, this is how I started in 2005. It's real easy. You go down to the county office, and you fill out some paperwork, pay a small fee, and you're a DBA. You know, so that means you can use that business. At that time, my DBA was Elizeli. The challenge with it is your legal name, or the business's legal name, is your name, DBA name. So kind of what I am saying, well, okay, it's the next slide. I anticipated myself. Still need a business license, maybe, depending on what you're doing. But this is just so you can use a business name other than you know, so it's not Sierra Boykin, you know, sending you this letter. It's, you know, Boykin Enterprises, you know. But when you finally sign something, it's Sierra Boykin, DBA, Boykin Enterprises, right? So there's no real other entity. You just grabbed a business name, and to make it really confusing, so as a self-employed commercial real estate broker, with my license my real estate license, I actually have a DBA at Virginia. So if my license, it's confusing as all heck when I fill out paperwork, because I don't know what the state, I always have to pull it out because I don't remember. See, so it says my DBA is actually my full name, which meaning my full spelled out middle name. So anytime anything goes on, I have to go Luis Eliezer Martinez, you know, not Luis Martinez. You know, even though that's what I use everywhere, my DBA as a real estate professional in the state of Virginia is my full name, and that's how it has to go on everything. And I remember them telling us, hey, be careful how you write your name, because however you write your name, it's gonna stick, and for you to change it, it's a pain in the butt. And I guess I didn't know which field was the one that made your DBA, but I chose the one that made it a pain in the ass. But yeah, so this can be challenging, because then it's it can give on paper, it can give a less than professional look or feel than what you're aiming for. But really, at the end of the day, really, it's you're the professional, not the name, right?
And just an aside on that, some states will call that a fictitious name.
Oh.
They don't say DBA, so don't be confused if you go on a site and you see, register their fictitious business name.
Yeah. And you can actually, and that's awesome, yeah, because that jogged my memory. You can DBA the other ones. So I remember I came across that with an LLC, and that is absolute pandemonium. I saw a brokerage that did that. They were blah, 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 Realty, LLC, DBA, blah, 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 blah. No, so I knew them as the blah, 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 blah,
Why would they do that?
I have no
It's sure lose.
Yeah.
A lot of companies have these really crazy names, like, if I had to finish the contract today, their actual name is Hansa Customer Equity Private Limited, but their DBA is Hansa Security.
Yeah. So yeah, me being me, because I was in a similar boat. The reason I learned that was I called the state of Virginia, SEC, and I told them, hey, my business name, my LLC was Elizeli Real Estate Investments, and it was a mouthful. So I shorted it to Elizeli REI, kind of like our name, right? It's like I keep trying to figure out how to make this group's name smaller. But I remember I called them, I was like, hey, how can can I just go ahead and just call myself Elizeli? They're like, no. In order to do that, that's the term she used. She's like, you have to get a fictitious name as Elizeli. And I was like, so wait a minute. So I still have to keep signing everything, Elizeli Real Estate Investments, DBA Elizeli. So I'm like, dude, that's like, I'm calling you because I'm telling you my name's too long.
And everyone knows a famous one.
Yeah.
Xfinity Home. The real name is Comcast. The real company is Comcast. You know, they have a bunch of different entities in each state, but it's Comcast something. But their DBA is Xfinity Home.
There you go. But yeah, but that's DBA. No, you know, this automatically is the cash method of accounting. So, you know, when you get the money, you recognize it. When you spend the money, you recognize it right then and there. If anything, if like the whole cash accounting and the accrual accounting is like not sticking with you, don't think about it. You already use the cash method of accounting. Like that's the natural human way of managing money, right? So if you're like, I don't know if I'm using the cash method, you probably are. Okay, so the LLC, leave this one for last. This is the heaviest lift, right? This is the chameleon. This is probably where we're gonna have the most conversation on. You know, those of us have stardom. The big one with this is like the whole be careful with the sole member LLCs, and that is because they tend to be audited significantly more than any other type of entity. Now, the mathematician and statistician in me is always skeptical on that, because I believe that, and I haven't looked into this, but I believe that there's also significantly more of these than there are of the other ones. So I don't know if, you know, because that's usually what they tell, you know, it's like, hey, those get audited more, but I'm like, well, but if there's also more, really what I'd like to see is what the percentage of each pool is to say, okay, that one, you know, actually does get audited more. But in any case, you can send up Red Star clusters, well, with any of these entities, and we'll kind of touch on those a little bit, right? So this here, like we were talking, can be taxed as an S-Corp, taxed as a sole proprietorship. You can have multiple members, so it's a limited liability company, not corporation. I see some people use that. That's important because it doesn't have shares. You know, it has members. So like, if we're doing we're getting now into example mode, but if we were doing a syndication, you know, does everybody understand what a syndication is? Yes. All right, cool. So if we're doing a syndication, and we just said, all right, we're gonna make this the Veteran LLC, you know, Veteran Investment LLC. Then all of us that were contributing money into it, know that want to be part of that LLC, we would all be members of the LLC, and we would have to say what percentage of ownership each of one of us has into that entity. And you know, these are also a little easier to maintain. There is paperwork required, just like everything else. It's a lighter lift than the other ones. You have to have, I think, like annual meeting minutes. You have to have articles of, you know, OOP.
Articles of organization.
Oh,
You have
thank
to
you.
have the most important thing is an operating agreement.
Operating agreement, yes. Okay.
Operating agreement. And that, and I know a lot of people will disagree with me, but even for a single member LLC, you should have an operating agreement. And the reason for that, I mean, you say it's the most audited entity, but the other reason is because when you're sued and you're not operating within the confines of your operating agreement, they're gonna say, well, you know, we're just disregard this entity, and we're gonna be able to come right after you, just as if this entity didn't exist. And that's not piercing the veil. A lot of people call it that, but it's really different for the LLC. But that's another danger with the sole member LLC.
Okay, sweet. Thanks for sure. Yes. That's awesome.
So I can understand.
Yeah.
So we're treating each one of these as one separate item, not combined in any bit of way. So LLC doesn't have to be an S or C, or is it LLC S, LLC C? I mean.
Okay, so.
I'm just trying to make sure
Yeah.
I
So
clarify that.
each one that we've talked on is its own thing within itself.
Yeah.
You know, so there's a C-Corp, there's an S-Corp, there's a DBA, there's an LLC. The LLC, this monstrosity here, it's the popular one. For tax purposes, you can have it be taxed either as an S-Corp or as a sole proprietorship, you know, or a partnership,
Or
or a partnership, so all three. Now, it still keeps calling itself an LLC. It's still an LLC. It hasn't become one of those previous things that I just mentioned. It is still an LLC, but it's just being taxed like one of the other ones.
Doesn't your income determine how you can go into S-Corp and partnership and all
No.
that?
No.
You just say, I wanna.
Your tax situation would probably, what's the word I'm looking for, guide you to a certain thing,
Okay.
you know, for an organization, like he was
Possibly,
saying.
possibly.
Yeah, possibly. But otherwise, it's just like, most of syndication, because I'm part of it, they're all partnerships, because that's the way it's just done.
Okay.
Yeah,
But-
and so,
So you have, like Lowe's
Mhm.
is an LLC. It's
Yeah.
actually a limited liability company.
Yeah.
It's not a corporation.
Okay.
It may tax itself as an S-Corp, probably does, okay, but it actually is an LLC.
Let's go back. If Lowe's is an LLC, then who's the sole proprietor? Or,
So
will-
it goes
yeah,
back to
an
that,
LLC
be the three
can
things.
be a multi-partner deal.
okay.
We could all
Create an LLC.
12 of us sitting in here could all be members of a limited liability company.
Then whose taxes? Who's
It
gonna
all
tax?
passes through based on your percentage of ownership in the LLC.
Yeah.
most
So-
likely it's owned by other corporations.
Right.
Members can be other corporations.
Okay.
Which are their own entities,
Right.
okay? So if we're all equal partners, and there's 10 of us, and we're all equal partners in the LLC, then the profits get passed as 10% to each person,
Right.
okay? Or entity, if, you know,
Yeah. The paint can go very, very complicated once you get into taxes or all. Jason?
So, I kind of got thrown off when you started talking about syndication.
Uh-huh.
You said that, let's say we set up a syndication between all of us, and we all provide a percentage of money. So, do we have to set up a C-Corp?
No.
We're gonna own a percentage of that LLC, or?
No.
how does-
So that answer can get phenomenally convoluted, like very, very quick. The example I was simply using was, you know, we could all go in, and it's a negotiation amongst us, you know, or whoever the managing member of the LLC is that's leading it all. But you know, your equity could be because of the money you're putting in. It's possible that you have more equity just because of way everything was negotiated. Maybe you're the name that makes it all happen. So it doesn't necessarily have to be tied with money, but you can come in individually, or you can send an entity on your behalf. So you can send in a C-Corp to be a member of that LLC. What I was trying to explain with just the LLC and
So in the
syndication.
case of a
Yeah, well-
syndication, we put a certain amount of equity in it. We just don't call it a share. We're becoming a partnership in the syndication. Would that be fair to say, or?
Yeah, you just use a lot of words that are, you know, get
I
all.
know you mentioned
Yeah.
C-Corp, you
Yeah.
don't
No,
mention
we
shares.
use it for syndication.
Yeah.
Normally, a syndication is set up like a partnership, and it's a general partnership, and there's gonna be a general partner who's actually the entity that's really structuring and controlling and will be operating the thing. The investors wanna be limited partners. They don't want anything to do with it, they just wanna be an investor. And they're dependent on the general partner, you, the syndicator, or your a group of people who are the syndicators, to run it. And so, but that's going way down to weeds.
Yeah.
Okay.
Yeah.
But to
Yeah.
be fair and not to push it down any further, it's better to say a partnership rather than a share in the syndication. Would that
It
be?
depends what it is. I
Well,
don't-
for an LLC, they're always called members. Okay, always. What's getting confusing, I guess, is because when you're structured as a S-Corp, normally corporations have shareholders. And then, so sometimes people use that word. And then if you're a partnership, they have partners. And then some people use the word partner instead of member. But an LLC, under the statute, always has members. They're really not called partners. They're not called shareholders, although people do that. So
Okay, all right.
it's just.
Yep.
Yeah, the verbiage was kind of confusing me.
Yeah, yeah, and it's all like words have meanings in all this. So like, you know, you can't intermix them. or you be casual about them. Like, when you were mentioning like general partners and limited partners, that's like, and that's something I didn't cover here, because that one can make my head hurt, which is, the whole general partner, like, which I found that amazing with the LLP when I studied this years ago, was the general partner does not have the liability protection, but the limited partners do, So it's like, the deal goes sour, everybody can go headhunting on the general partner, but everybody else is got, they're nice and clean. So it's but partner means something, member means something, shareholder means something, and it's best to like not cross them.
I had a question regarding having someone else listed as the registered agent.
Yes.
I've been in some circles where the conversation is where your actual name is not tied to your business, and like if people wanted to know that you actually own that business, like it'll take some digging, so they kind of have like either a lawyer's office or may even have the LLC set up by the state, and I was just wondering if you guys kind of.
So, the registered agent is the agent. So that's like me. I'm a Virginia resident. I want to, have either my LLC operate in DC or start an LLC in DC. I'm not there, so there has to be an agent to be able to receive documentation, like in a lawsuit, right, Richard?
Yeah, it's mostly for service of process.
So it's that agent is going to receive that type of documentation on your behalf, but your name is still on there. You know what I mean? Like, because it's like when
I believe is Nevada, where they have it privacy laws that you don't. I think it's Nevada is the only one.
You think so?
3 of them.
Oh, there's 3 of them now. Okay.
Yeah.
But most other states.
Yeah.
But I wouldn't. Oh, I mean, I know this is going aside.
No.
Don't believe anybody who says to incorporate in those things. It's a waste of time and a waste of money. Incorporate in your state. Okay, it's just don't do that.
Yeah. And it's it's so I find, and this is personal opinion, this is not fact, right? So and this might be my personal biases and my cynicisms, and it's my interpretation. But it's like I feel like with a lot of this stuff, there's a lot of boogeyman bullcrap. It's like the people are always trying. I think it's just the American way we sell fear, and with this stuff, it's usually what's happening. With all these entities, people are usually selling fear. And that's where my skepticism, statistician side of me, which is like, what are the odds all these things are gonna, happen all at the same time? It's like, but it's that's why I'm always cautious. Like people are like, oh, like my comment as to those are the most audited agents. It's like, well, if there's more of them, that's like people throw out more $1 bills than $100 bills. It's like, okay, well, there's more $1 bills anyway, So it's like maybe people are throwing out $100 bills, but you don't, percentage-wise, you think you get what I'm saying. But ultimately, like a lot of this stuff, there's a lot of. One of the reasons I made those LLCs when I made them was because I didn't want to pay the $1,000 to a lawyer to make them for me. But it was like.
Legal Zoom. 2 seconds.
Yeah.
It should honestly.
Yeah. But I think this is where Richard's going, is the things that Richard said you need to have is like really the reason to have them. It's kind of like the concept of you spent $40,000 on a car. No, you didn't. You spent $40,000 on a car manual, and you just happen to get a car with it, right? Because most people don't read the manual and all kinds of crap having a car, and then they so it's kind of the same thing. It's like getting the entity isn't even half the battle. It's really controlling and working that entity the way it should. It needs to be operated as an entity. If it's not operated as an entity, it doesn't have all the other stuff.
Operating agreement.
Yeah.
And the reason why he has that chameleon is because the operating agreement really discusses how that organization is structured and how it's going to be taxed. Okay, if you're gonna do S-Corp, or how you're gonna do self-employment tax, it's gonna talk about that. And you wanna make sure that you're operating within the confines of that operating agreement. And if you're not, and especially if you're a sole member LLC, you risk the danger of them saying, well, you just have this in name only. You know, you're really not following any of what you're supposed to do, so we're just gonna disregard it.
So
You know.
would that mean if Josh was at an LLC for wholesaling, and then he bought a fix and flip, and then he started fix and flip, and that operating agreement said, I'm a wholesaler?
Oh, no, that doesn't go down to that, say, that specific. You can,
Real estate.
your
Real
purpose,
estate investor
your real estate, you
would
know.
cover the-
Yeah, no, they don't get down to that, no. What I mean, operating within the confines of the agreement is like, if, you know, you say you have to vote on something, you better do that. You better have the documentation to do that. You
If
know,
it says you're gonna have an annual meeting or
Right.
some annual meeting.
Do it.
You just need to have paperwork.
yeah, you have that
You
paper.
just get to have a meeting with yourself.
Yeah, you have to
I
make,
had a meeting with
but
myself.
you gotta do it. You gotta operate as if you are a separate entity.
Understood.
Yeah.
Okay,
So
so you're
it's-
talking about the actual entity.
Yeah,
not necessarily
separate
the
bank
specifics
accounts,
of
don't
business.
commingle the
Yeah.
funds.
Right.
all
It's
that
like
stuff.
one page, you just have to have a few things.
But the operating agreement
It's
is
really-
important, and that's something that the lawyer, I can provide examples, but based upon how you want to structure it and how you want it to be taxed, there are certain changes that should be made, you know, and also, you know, changes about how you want to introduce new members if you want, how you're going to get rid of a member, you know, those things are inside there as well. But that's something that you want your lawyer and your accountant to look at. And I'm not trying to generate business for other lawyers, but I'm saying that's a necessity, you know. Don't let that, you can pay someone $1,000 now, or you can pay, you know, someone else $50,000 later in a lawsuit, you know. And that's the same thing, I write contracts day to day, and people always complain, you know, oh, it's cost so much, why is it gotta cost so much? It's like, well, you can pay me now, or when you get sued, you know,
Pay me later.
you pay me 10 times later.
Yeah.
Okay?
And that's the big thing, and that's the big thing, and I'll touch on going forward is maintaining the entity is by far one of the most important things that, I mean, that is what you say you are legally and in practice. So when tax time comes, you got to have all your stuff in order, you know, as that entity, you know, and what's required for that. You know, if it's, you know, you want to write off meals, then you better have a log of some kind. So, you know, I do it right on the receipt and take a picture of why that is a business meal. You know, there's actually like a little laundry list that I used to have memorized that's on the IRS website as to what constitutes as a business meal, and you write that right on the receipt. You know, business meal with Josh Barrett discussed wholesaling techniques in the greater DC area, blah, 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 and whatever other little bullets I'm supposed to mention. Take a picture of it, log it, you know. That is an actual legit business receipt, you know. So that works kind of across the board, but there are requirements for each one of these entities. So if you're going to invest in to be one of these and declare to be one of these, you have to operate as one of those. So that's the big, and that's what Richard is driving home there is you know, you can do it fast and you can do it yourself, but really, what do you have at the end? You know, that's my question. Unfortunately, well, not unfortunately, but fortunately, like nothing ever happened to me, you know. But you know, it's one of those. I shouldn't have been doing that. You know, I really shouldn't have been doing that. Now, I did have, and I started doing that because I had a lawyer draft one for me. I was a wholesaler at the time. He created an LLC. I didn't know any of this stuff. I didn't know. I mean, I had heard the term C-Corp, S-Corp, blah, 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 blah. But I kind of knew, okay, LLC, I think that's what, you know, I'm supposed to be. And that's what they created for me. And they put me taxed as an S-Corp, which confused the ever-living bejesus out of me, because I was like, no, dude, I told you I want an LLC, not an S-Corp. And it was like, you know, and then that's when I started learning, oh, okay, it gets taxed different, you know. But what caused me to then go down the route of start making my own was really bad salesmanship on their part, right? This passing off the buck to someone else. But it was no, they didn't explain what it was that they did for me, right? So they gave me all this stuff, And it's like, okay, well, what is it? You know, like they should have, in my mind, sat down with me. Okay, all right, this is what an LLC is. You know, this is what we're giving you. This is why we're giving you what we're giving you, right? This is all part of the sale, right? You gotta show what the value proposition is, what it is that the person's buying. I never got that. I paid $1,000 and I got, you know, series of paperwork. Yeah, and I was like, thanks, a-hole. You know, it's like, you know, it's like, what was all that for? You know, but in my mind, you know, I was a 20-something at the time, so I knew more than anybody else. So, you know, I was like, that was a complete total waste of money. You know, I could have gone to like Staples and bought this stuff on the off the shelf. Now I wouldn't have, because I wouldn't know what the heck I was buying. But same thing though. It's like when I was done, I didn't see what the value and what they gave me was, and you know, I tried reading some of it, but it was like it's really boring stuff to kind of read. But yeah, but that's LLCs. How we're doing on time? 25 minutes. Okay, so pros and cons. We kind of beat these to death, so we'll keep moving. The gotchas, right? Bookkeeping, record keeping, receipts. So this is all we just kind of just said, right? So it's like you've gotta maintain your stuff the way you gotta maintain your stuff, right? So, and what Tom was mentioning earlier, all these things can be switched back and forth. You know,
I have one question, but I just heard this, I haven't done it. There could be tax consequences from switching from one to another, couldn't there be?
I imagine so. I don't know.
Yeah, there are tax consequences, and you can't, I was advised, once you switch, that's it. You get one bite of that apple and change your mind.
Before they start going, yeah, because part of this is going to be audits, right? So, and this was the one that almost got me in trouble, right? And this is when I was starting out. If you have an LLC or you, well, not even an LLC, if you are claiming business expenses, you know, in any one of those entities, and you know, I don't know if this is like written anywhere, but the accepted standard is once you hit that third consecutive year of no revenue or no profits, all kinds of alarms are going to be starting to get set off in the IRS as far as what is it that you're doing.
Well, because they'll look at it as a hobby.
Yes, that's the word. Yep.
Look at it as a hobby, and so now those expenses aren't deductible pre-tax because it's just a hobby.
Yeah. Yep.
It says revenue or profits. So if I'm generating revenue, but I still have a net loss.
Yeah, you should be fine. Yeah.
Most companies, most startups are like that for years.
Yeah.
Amazon hasn't made a profit yet.
Yeah.
Really, it hasn't.
But yeah.
Yeah, but Bezos has been on profit, and he keeps buying stuff, but he keeps losing money.
Yeah.
Is that because there's more money in the world where they can do that, or how does that work? Why does that even matter? I mean, how can you still operate and buy stuff?
So, I kind of can't, you know, one of the things I studied in school was the airline business. The airline business, that model is what you just mentioned. It is by far the most amazing achievement of sustainability that you could ever fathom, because they are masters of losing money. Like everybody has these fancy salaries, and you know it's highly skilled work and unionized labor down on the flight line, but airlines typically do not turn profits. So you have an entire industry that the entire game plan is to keep these flights continuously going and not turning a profit. How they pull that off, I have absolutely no clue.
Use the dollar you paid today for the airline flight for next month to pay for the flight today. It's almost like a pyramid scheme. Okay, or what's it, a Ponzi scheme, where I'm using funds today to pay.
Yeah.
But I don't know how Bezos does it, but I know that Amazon has it technically turned to profit, but you know, he's making money, so.
But
$1,000 a share.
Amazon, people need, well, Amazon is more of a staple, I would think now than, I mean, everybody uses it.
Yeah, but I mean, it's still, I mean, its expenses are still high, you know, it's still running hot, so.
Well, and we don't know what type of creative accounting they're doing, so that Amazon loses money when someplace else, Bezos, is making it.
And, you know, and it's one of those things too, I mean, I don't know if I'm sure at their price point, they're probably using and now I'm going into the weeds and I'm speculating, but just what is that? Humor me, right? So in the accrual method of accounting, right? The one that I told you want nothing to do with debits, credits, blah, 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 blah. The big thing that we as investors, now that we're stepping away from real estate because we don't use these terms in real estate, EBITDA, E-B-I-T-D, EBITDA. Yeah.
Earnings before income,
Taxes.
and amortization.
Yep, taxes, depreciation, appreciation.
Yeah.
Yep. Mhm. So that big acronym, that is how much the company actually made in like money, you know? But if you go down to like the profits, you know, like, which is after EBITDA, you know, there's a lot of accounting stuff, like accounting magic that happens, right? So, and it's so a good accountant can change your tax situation, you know, without ever breaking the law, you know, just by looking at what it is that you're doing and you know, understanding what GAAP tells them, the generally accepted accounting principles, what sound auditing practices are, and what the law says. A clever accountant can make you turn a loss, even though you're, you know, on paper turning a profit. You know, if it's as aggressive as Amazon, I don't know.
Well, it could be the same thing, because Bezos started it with his own money.
Yeah. So.
The thing is, that it seems like Amazon is about, you know, they bought Whole Foods. Feels like the world is.
Yeah. And they're buying Target.
There's so
Everybody starts
Yeah.
ordering food
Yeah.
online.
Here's the caveat. Amazon used to be a client, but Amazon has so many different entities, okay? And their major entity is not the corp that everyone knows. It's an LLC. Okay.
Is it LLC?
There's a part of it that's in there, yes. There's a thing that's traded on the stock market, yes, but their major part of Amazon is an LLC.
Okay. There you go.
And so, yeah, there's ways to account for things and stuff like that. But so I don't know what actual entity purchased Whole Foods, but it may not be the corp.
Yeah.
You know.
Bezos does anything, it's Amazon. He could go buy a Lamborghini out of his own checkbook and then say that Amazon bought a Lamborghini.
So you can't, so trying to figure out what Amazon or GE or some of those guys do is, you know, is speculation and craziness. But, you know, this goes to the whole thing that's going on. You know, corporations in the US, they say, well, we pay too much taxes. But, you know, I remember hearing about GE having an army. They spent more on their people, their accountants and lawyers to reduce their taxes than they actually spent in taxes, you know? So they had those people to do those things, to figure out how they can lower their tax bracket and pay the minimum amount of taxes they have to pay.
Yep. So it's the game.
That's the game.
All right. So keep going. So another way to get yourself audited, which is, I guess, you know, a necessary evil of it all, I suppose, is high revenues. That you know, for whatever reason, you know, catches the IRS's eye, claiming a lot of deductions, and that's why you always have to keep your receipts. The way I do it is, so I don't know if it'll work for many people here, but I have the Quicken self-employed tax online thing. So I link it to my bank account. Every time I have a transaction with my, I don't use credit cards, I only use debit cards. But it sees what I'm doing. I go in there, I categorize it per, you know, tax categorization type stuff. And then I can upload an image of the receipt. And then at the end of the year, I can just take that whole file and send it over to an accountant and they can do my taxes. So there's tools out there, which I'll get into in OER, on how to keep yourself organized so that, you know, like I'm sure maybe 95% of America is doing right now. Well, maybe not now, maybe April 14th. But December 31st comes around, it's like, oh crap, the taxes are coming, go get the shoebox, the receipts are all in there or something, you know. I think most are worse than that, you know. So it's you don't have that luxury anymore being on this side. You know, once you decide that you're gonna have to start deducting business expenses. You're gonna have to hold yourself accountable to make sure that, really 5, 6, 7 years from now, you can prove that you spent X amount on whatever you spent on, Usually you don't have to keep a receipt for anything under $75, except for business meals. Usually the IRS gives us a pass on those, but definitely anything over $75 has to be, there's an expectation that you have a receipt for. So, all right, and keep it simple. Get an entity that you understand and can manage. Right? That should be self-explanatory. All right. So with that brings us to the end, and this one was our meeting today was a lot more conversation.
I'll tell you, one thing that we covered last time we did this
Uh-huh.
is this idea that people, I hear it a lot at other meetings, this idea of living corporately, but it goes along with the rules for expenses. A lot of people, I hear these things and they think that everything can be expensed, and they can buy a new truck and it can be a business expense. And I remember last time you went over, went in more detail about what can and cannot be expensed, but the end all be all is everything can't be a business expense. So that idea of living 100% corporately is crazy and fictitious, and don't try it.
Appreciate for that.
Yeah. But, all right, so with that, we actually have some time. So what we're going to do is we're going to ask people, how can we help you?